What's going on, everybody? Today I want to talk about the mortgage that is the most popular for first-time home buyers, the one that is insured by the Federal Housing Administration and developed by Housing and Urban Development. That is the FHA loan. So you've received your free bag of money from McDonald's.
And this bag. Well, what's in this bag?
Josiah Vargas with
Well, look no more. You can put 3.5% down on these FHA loans to get yourself into a home, even now here in 2023, where the prices are a little bit biblical. Contrary to popular opinion, you do not need to be a first-time home buyer to actually get one of these FHA loans. You can get these loans as many times as you like. However, the loan that you get for the house that you choose needs to be your primary residence for up to 1 year. Here are some of the developments in 2023 that make the FHA a little bit more popular, a little bit more attractive to the borrower as it stands right now. Number 1, credit requirements. Credit requirements for the FHA loan can take you all the way down to $500 with a 10% down payment, and to obviously 3.5, that famous down payment number, if you've got a credit score of around 580. Keep in mind, when you are applying to qualify for these loans, you're going to want to provide for at least a debt-to-income ratio of around 42% to be comfortable to get into these loans. However, it is not unheard of for lenders to work with you on that number, especially if you have a good credit profile. So, try to work your way in and see what you can come up with when it comes to the debt-to-income requirements, because that's really going to go a long way, especially with prices and rates still generally being on the higher end of the spectrum. But keep in mind, even though you're going to get a fair market price, even usually a pretty good price when it comes to the rate on an FHA loan, those are still sitting in the mid-sixes. In fact, I think I did a perfunctory review on bankrate.com and I came up with more or less a 6.5% interest rate. Now that's nothing to scoff at when home prices are still sky high. So if you commit to these FHA loans on these homes, then you're going to end up with a pretty hefty monthly payment that you're going to want to make sure that you can afford. Gone are the days when you could count on 2.75% to put down on a $250,000 home, and that means a monthly payment of whatever you got in your pockets, right? 2, in the process for applying for these loans, keep in mind, you're going to have a little bit more of a hefty mortgage insurance commitment, both on the upfront end with your upfront mortgage insurance premiums, as well as mortgage insurance that you're going to have to pay over the life of this loan for quite a long time. It's not going to be like a conventional mortgage where the PMI is going to be exhausted once you get to 78%, or you can apply to get rid of it at 80%. This is something that you're going to have to commit to when you're applying for this owner-occupied loan. A really big, almost yearly event at this point with the FHA is the updating of the FHA loan limits. And for 2023, it's no exception. We have new loan limits for FHA loans. So as you can see, we're going to have loan limits of $472,030 in the low-cost areas. And in the high-cost areas, we're going to have loan limits of around $1,089,300. Alaska, Hawaii, Guam, and the Virgin Islands, as you can see, a little bit on the higher end of the spectrum, you have $1,633,950. These are all of the loan limits for a one-unit property that you're going to be living in. That's crazy. Put 3.5% down, you can leverage all the way up to almost 7 million in certain areas of the country. So this is no joke. This is really something that's going to make more people have access to this kind of cash. Instead of going through all of the other types of properties, because you can go all the way up to 4-unit live-in properties that you can get with an FHA loan, I'll simply list them here and you can refer to them whether you're talking to your clients or you're considering them for yourself. Which, I thought about applying for that loan balance, but I think the money can be better spent on my collection of magic cards. Now, I want to take this opportunity to say, if you enjoy content like this, please go ahead and leave me a like. Go ahead and comment on what you think you'd like to see next. So when you're considering a loan, or if you're referring your borrowers to this loan, these are some pros and cons that you can sort of keep top of mind. Some of the pros of this thing are, it's really easy to get into one of these loans. Like I said, there's a low down payment. There's relatively low credit requirements. I mean, 580, forget about it. 500, oh my gosh, right? So if you can get 10% of a down payment for a property and have a 500, you have a shot at getting into that home. FHA also has a ton of options for if you're trying to streamline on a refinance or get a refinance. One thing that I have noticed about sellers though, on the con side, is that they're not too keen on these loans, and for several reasons. One big reason is that sellers, and more importantly, the agents of sellers, really do not enjoy the process of the extra stringent requirements on the appraisal and just the hassles that go along with government loans in general when it comes to getting this deal really run through the pipe. Another really inconvenient part of the FHA loan is that you have an upfront mortgage insurance premium as a part of the cost of this loan, in addition to your mortgage insurance premiums that you'll be maintaining over a monthly basis. Your upfront mortgage insurance premium for this loan is usually going to run you about 1.75% of the loan balance upfront. The annual mortgage insurance premiums that you're going to be paying will vary depending on your credit profile and how much you put down, but they can waver between anywhere from 0.4% to 1.1%. These loan balances, these loan limits, they are going to be set, so you can't exceed these and be able to engage with the FHA to get these loans for these homes. And if you want to calculate how much that is going to interact with your monthly payments, I did a video on mortgage math that you might be interested in. You can find it up here. One thing that I personally really think is useful for these FHA loans, especially now that they've been updated in 2023, is that FHA is getting really, really good about updating things to empower the borrower. These things involve things like incorporating alternative credit. That means you can now incorporate things like rental history. If you've had a pretty good rental history, they're going to be able to incorporate that now. Another good thing is now we're able to get private flood insurance, whereas that was a big no-no before. Overall, in 2023, FHA, still a pretty solid loan, still going to get a pretty solid rate. I mean, it's not going to be like your top of the line rate by any means, but you're still going to get a fair market price and something that you'll feel good about going away with, especially with the amount of down payment. And if down payment is still kind of an issue with you, you can still engage with things like down payment assistance, which you can find in most local areas or companies that can help you out with that. Keep in mind, this stuff is still kind of risky. Just anywhere you go in the mortgage market, things are going to be riskier. Payments are going to be higher. I don't believe that the prices for homes have gone down enough to warrant taking out these rates on them. So, you got to use your judgment when you're getting into a home, because you might need to expect that things aren't going to skyrocket when it comes to the appreciation. This is still a tool that you can use to get in a habitable, comfortable living situation at the very least. And, down the line, you can live in it for that year and then move out, treat it like an investment property. And you can apply for another one if you like. So these are really cool options just to get your foot in the door when it comes to home ownership. And that's going to do it for FHA loans. Let me know in the comments if you have any other questions that I can help you with. There's all sorts of technical aspects about qualifying and engaging different services to be able to get into these loans, whether it's getting your debt to income ratio where you need it to be, deferring your student loans, or getting your loans out of deferment so that you can help lower that DTI to get into these loans. Thanks so much, guys. Hopefully I'll see you in the next one, a little bit happier and a little bit richer.